Hey traders, it's your weekly wrap. We just closed a wild, volatile and insightful week in the markets. We saw gold smash records, bank jitters ripple through credit market tariffs, talk of tariffs cool slightly, and yield action driving flow every day. In this video, I'll walk you through the narrative arc of the week, break down what held and what cracked, highlight sectors and trades that mattered, and map out what I'm watching into next week. So let's dive in together. Major US indices ended the week higher despite midweek turbulence. Let's take a look at those figures visible in this article. On Friday, S&P rose 0.5%, the Dow rose 0.5%, and Nasdaq also rose 0.5%, mirroring one another, while the Russell fell ever so slightly by 0.6%. So for the week, S&P up just shy of 2%, the Dow about 1.6%, and Nasdaq also up 2.1%, while the Russell 2 sits up 2.4%. So all positive, all showing gains. Then US equity funds saw renewed inflows, especially into tech and financial sectors. Gold, on the other hand, surged again. Safe haven demand remains alive. So the broad picture traders, risk assets held up, but flows were selective. Credit fears, yield relief, and hedging demand all punched through. So the themes that defined the week. Firstly, bank and credit stress with regional risks. This week was punctuated by disclosures from Zions Bancorp and Western Alliance about loan losses or fraud exposures. That shook confidence in regional bank credit. That weakness seeped into the market sentiment. Some traders questioned whether broader credit risk is rising. Alright, then gold. Gold broke records again. The 6-7% weekly jump shows financial institutional demand. Here's our gold price currently. This wasn't a once-off. It signals that many are pricing in uncertainty, not full-blown certainty. Next, tariff and trade easing and macro optimism. So we will stay away from the tariffs, but with regard to the IMF and some markets are now hinting at more benign global growth assumptions, easing some worst-case fears. Valuation and flow rotations. Growth AI got bid at names, but the strength was narrow. Many funds rotated into safer, less volatile spots. Quality, defensives, and cyclical sniffers. The value tilt is real. Capital is probing areas that underperformed earlier in the year. Volatility and market discomfort zone. The VIX spiked midweek. Price action was choppy. Traders were whipsawed. Some themes got punished, even if fundamentals were okay. The overall message: we're in a regime where headlines matter and flow is fragile. So let's talk about a little bit about what worked and what didn't last week. Winners and themes that held: gold miners and safe havens. These names got real bids. Selective, semis, and tech. When the group had strength, it outperformed. Defensives and staple consumer names, they served as ballast in a weak stretches. Some underperformers and broken themes. Regional banks and weaker credit names got hit hard. Energy and materials. Cyclicals were weak, especially with oil softness. And speculative growth names without earnings supports often sold off hard. So let's take 3 lessons away from this. 1. Always watch credit and financials. They can break the tape. 2. Volume plus confirmation is greater than hope. Gold is no joke this week. Treat it as structural, not just tactical. And lastly, I'm going to give you a 4th one too. Mixed environment favors adaptive traders, not rigid bias. So let's stay liquid, traders. Right, trade highlights and signals that mattered. Breakouts and semis were clean when correlated with broader flow. Gold miners and metal names saw leverage moves once gold confirmed strength. Defensive names outperformed on weakness. Good trade on rotation days. Lastly, watch the failed break trades. When tech tried to pop up and failed, many shorted into it. What to watch going into next week? Yield levels, the 10-year reaction. Any durable move, one way or another, will shift the tone. Regional banking and credit data like stress tests, disclosure, or earnings surprises. Gold price action. Whether this run extends or gets exhausted matters for risk appetite. Earnings and forward guidance, especially from tech, AI, and financials. Trade and policy headlines, tariff negotiations, supply chain noise remain bullets. Finally, breadth from small and mid caps. Whether they join or stay sidelined will confirm leadership. Alright, as mentioned, IMF highlights elevated risks in global financial stability report. So still concern around the bubble developing around AI. Whether that's true or not is to be seen. So traders, let's wrap it up. Here's your takeaway. We closed the week higher, but the path was ugly. Credit stress, yield shifts, and safe haven rotations wrote the script. Next week will be about whether risk can build conviction or if we see cracks. Gold, credit, and yield will act as the referees. Enter structure, not impulse. Be nimble. Don't lean too hard until the tape tells you. So traders, I'll see you next week before the open on Monday. Trade sharp. Stay disciplined. Thanks for watching the video. All the best. Take care now.